Hello traders, Gary Wagner here. It is approximately 12:30 in Honolulu, 6:30 in New York. It is Tuesday, 8th day of June, 2021, and this is the daily report for gold and silver. Yesterday, we commented if gold closes above $1,900 per ounce in New York today, it would probably trigger a buy signal. It did not. It closed down below that at approximately $1,895. On today's show, we will discuss the parameters that we are looking at for our next trade in gold. We'll also talk about silver and copper, and the show begins now. Gold futures were unable to sustain its price point above that elusive $1,900. It did open today at $1,901. However, it is currently fixed down $3.60 at $1,895.20. Today's decline in gold is primarily the result of a stronger U.S. dollar. As you can see, it is up 0.22%, with gold currently down in terms of percentages 0.19%. So roughly all of the decline is due to dollar strength. This first chart that we are looking at is a weekly candlestick chart of gold. What we can say is that 1920 is the new interim resistance area after hitting that high last week. It has not been able to sustain a price point over 1,900, but I think that that is achievable. However, if you recall from yesterday's show, I said that a break and close above 1,900 would signal or trigger a buy signal in gold. If it cannot break 1,900, and we do find resistance in this area, we do have strong support at approximately $1,850 to $1,844, the 61.8% fib retracement. We could see it track as low as that before moving back higher, or we could see it break above 1,900 on a closing basis, and in that case, our sustainable upside target would be $1,947.90, the 78% Fibonacci retracement. For right now, we remain flat with no active trades in gold. Silver had a pretty dramatic decline today, giving up about 30 cents. That's over a full percentage drawdown. 27.72 cents is the current print. Considering that the dollar had strength, it had strength only accounting for 1/5 of today's decline in silver, with the other 4/5 directly attributable to selling pressure. Traders, we are looking at a daily chart of silver futures, and it is pretty easy to see on this chart that it has been trading in a defined and narrow range, caught between the lows at around $27, $27.12. That is the 38.2% fib retracement, and the 23.6% retracement at $28.37. We have been stuck in this range since the beginning of May. While we have seen a couple of highs try to take out that resistance area on a closing basis, both attempts were unsuccessful. The same with support. There were a couple occasions when we had extreme lows come in below the 38.2% retracement at $27 per ounce, but both of those closed above it. In other words, those were unsuccessful. Right now, we are sitting on the sidelines with silver until we see it either trade to the bottom of this range, which would indicate a solid buying opportunity, or a break above this price point, and then we would buy the breakout. But to trade within this range, I don't think offers us the opportunity that we are looking for, so we remain flat with no active trades in silver. While copper is still below the all-time record price that was set the first week in May at $4.87 per pound, it did gain about a penny and a half in trading today and is currently fixed at $4.54 per pound. Traders, I am extremely excited about copper's upside potential. As you know, we entered our trade originally at $4.55 per pound. We then recommended on our show last week To add to that position, if you had the available capital, that position we put on at $4.47.9 a pound. We've kept our stop at $4.39 per pound, which is held throughout this entire trade. Right now, we have copper very close to our entry of our first leg, which is $4.5430. And that's putting it up about a penny and a half on the day. It is the longer term prognosis or forecasts that are getting me so excited. The opening letter covers that in detail, with some analysts looking for copper to surge over the next 3 years. Maintain your current long position and stops in copper. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.